Welcome to the London Outlook for Friday, the 23rd of February 2024. Starting off with the economic calendar, as you can see, there are no red folder news events, and thus there is no bearing of the economic calendar on our trading decisions for the day. Then moving on to the 4-hour chart, or rather the daily chart for GBPUSD, what we can see is that from a consecutive daily bullish candle perspective, we have 3 consecutive bullish close daily candles, with yesterday being the third and today being the fourth. There's an expectation that today will be a bearish day um, from a daily candle bias. Then, from a 4H perspective, what we can see is essentially yesterday being Thursday put in the high of the week, and since the daily bias is to short, as well as um, the fact that Thursday put in the high of the week, the expectation is that the weekly wick will form. And because whilst we do have some bit of a week more or a larger week is expected, given the fact that we're expecting that the daily will close bearish. Having said all of that, moving back to the 4-hour, there's a bit to unpack. Yesterday was quite an eventful day, which squared off a lot of our uncertainties. Starting off with 4H market structure, we have confirmed bearish trend, as I've been saying for a while now, and then we had the pullback primary leg phase validated to trade counter trend. However, that achieved its objective by reaching the proton extreme, and then we had a push down, but a failure to take out the 4H swing low. After that, we had demand take control on the 4-hour, and what that did for us was actually validate that this swing high, a swing lower high potential was likely targeted, and that target was achieved yesterday. Now that we're back in the proton extreme without validating that this pullback phase primary leg was extended, there is once again only reasons to trade to the short side, at least until we have a 4H body break to validate that this pullback phase primary leg is being extended. And because we're trading against the pro trend extreme, we'll need the pullback phase last point of supply to support any counter trend trades. Given that that's not the case, then we're reaching deeper into the pro trend extreme and reacting from it. What actually makes sense at this point is that there is only reasons to trade to the short side. I've marked out this light 4HOB just for the purposes of validating the point at which the 4H primary leg becomes visible on the 4H time frame. Until then, the primary leg is only visible on the 5 and 15-minute time frames. So for that perspective, it doesn't really matter and doesn't really influence where we're trading from. Having said all of that, it's clear that the daily bias is only too short, and thus moving on to the 5-minute. Just to recap again, the higher time frame narrative only supports shorting from a technical analysis perspective. Then from a daily bias candles, consecutive candle, we have 3 bullish candles, which then suggests that today is likely to be a bearish day. And then obviously the weekly bias suggesting that given that Thursday put in the high of the week, Friday is potentially going to be a reversal, and that reversal is amplified by the fact that the daily bias is short for today. Having said all of that, there's 2 ways to position ourselves into a trade today. The first being the fact that the previous high of the day and low of the day is situated in a downward trend, even though yesterday's candle closed bullish. So from that perspective, I've set a limit order at the extreme because that's the best POI that aligns with my fibs above the Asia high. And as you can see, there isn't really any valid POI unless we want to consider the fact that there may be a chain right here. So there is that chain POI right there. Which we can consider shorting from. However, then it's a question of, do we have sufficient stop loss range? And if we put our entry there and our stop loss above the previous high of the day, that's 38 pips, almost half of our daily range. So that doesn't make sense, in this trade right here makes more sense with a more reasonable risk reward. And then the other alternative for shorting is to wait for this Asia high of the day to be liquidated, or rather to be validated to the downside. Once that is validated to the downside, we can then short. Essentially, we're looking for Frankfurt or London to take out this Asia low, and then we can have sufficient confluence to suggest that this high of the day will hold. However, what is likely to happen, given that there's a whole bunch of equal highs there, Frankfurt is probably going to sweep this liquidity, and a Frankfurt high of the day may be created. Obviously, if a Frankfurt high of the day is created, we look for London to validate why that Frankfurt high of the day should hold. And if London creates the high of the day, then obviously we'll wait for New York to validate why the London high of the day should hold. Given that there are no red folder news events, we're unable to validate why any session high of the day can hold without a subsequent session validating the strength of it. Having said all of that, that's pretty much the London outlook. Just to summarize, we only focus on shorts. There's reasons to trade to the short side, both from a previous high of the day, low of the day perspective, as well as waiting for current day validation of a new high of the day in the current day and then trading that idea. Other than that, I hope you have a good trading session and we'll chat again for the New York outlook.